All right. So I'm doing this as a favor because I know that if you want to talk, just sign in to the live chat on the YouTube, and we can talk. But other than that, let me get started here, and I'll have Telegram open just in case. Just in case. Setting everything up here. All right, so I can see both at the same time right now. I can see Telegram, or if you're on the YouTube live stream, I can talk to you there as well. So what I've got here are Nasdaq 100 futures, and I don't really have that much on. I've got my Gap Trader tool on, which just shows previous 20 gaps. Everybody's familiar with this guy. We've got tons of gaps above that remain unfilled. These are the NYSE session gaps from 9:30 a.m. to 4:15 p.m. Eastern time, and there's a ton of gaps above. So a simple strategy that works, and I've been doing some stuff with somebody in the chat room. You can probably guess, but I won't name any names. We do this strategy, and I every now and again I release some stuff that I found out over the years. The best strategies that you're ever going to deal with are strategies that buy you in at an extreme level and then show you at some other opposite extreme level that you're supposed to take profit or exit the trade entirely. So one of the most simple strategies that exists is this Larry Connor's RSI strategy that I talk about all the time. And that is what this is at the bottom. And it uses Larry Connor's in his book called Simple Strategies That Work, is very old, but works very well. It is the famous two-period RSI strategy, where overbought is 85 and oversold is 15, and you're taking a cumulative length, which just means an SMA. So a simple moving average of the two-period RSI. So if I don't use the cumulative RSI that I call it, it's just simply the two-period RSI with 85 overbought and 15 oversold. Most people are very familiar with the RSI regular 14 and 70 overbought, 30 oversold. This is not effective for fast-moving markets and for scalping. For another setting that's possible is just this two-period RSI with 95 overbought and 5 oversold. I have this set to histogram mode. That's just showing a histogram of the RSI, 95 overbought, 5 oversold, just so that I don't have to deal with, tons of information on the screen. This looks messy and noisy. I don't like that. I like this histogram where everything that's not over extreme levels is kind of faded in the background. When you use this, you can actually get some very interesting results as far as buying and selling at specific levels. So this is one way to deal with this. And what we can do is have a higher time frame moving average or something and use this in Confluence. I have another indicator on TradingView that's pretty popular. It's this candle plot MTF indicator. What this actually does, if you look on my profile, it's the only indicator on TradingView like this. Nobody else has published this, and I was nice enough back when I created it. I think that somehow Streamlabs, when I'm on this, it doesn't let me load. Doesn't let me load an idea. Oh no, there we go. Okay, so what this does is this is showing this is the example for the main page. It's showing this is a 15-minute or a 5-minute chart of Euro USD EU, but in the background it's showing 1 hour candlesticks, and the front 8 candlesticks are a different type. They are pine script V4 candlesticks where they are nice and have an outline. And the ones in the historical view, there's no way around this, are just plots. There's just no way around it. The other alternative is to plot a higher time frame Heiken Ashi candle. So you could be on a 5-minute chart and have overlay of 1 hour or above, or anything above 5 minutes in this case, Heiken Ashi. So with this example, what I'm going to show is that we can do a 5-minute chart on this, and it also gives you the ability to do, hold on one second, I gotta answer something here. Not only does the candle plot MTF indicator lets you do a higher time frame candle, and this is a 5-minute chart of NASDAQ futures. You also have this moving average ribbon in the background that you can do to another time frame. And this is the important part of what I'm going to discuss next. There is, like I was talking about, these are Camarilla pivots in the background. Camarilla pivots aren't working so great right now because the market's insane. And even though they are adjusting to the market volatility because it's based on the previous session's high-low range, so the range of the pivots is accommodating for that, it's just not working so well. A great strategy is to use a 5-minute or a 15-minute or a 1-hour chart. And I'm going to get this other stuff off the screen right now because we don't need it. And use something this right here. Use a fast moving average of 4 and a slow moving average of 8. We're doing things in very fast terms as far as the moving average ribbon in the background. I have another plot, another indicator back here that is actually, if you Google me, once you actually start looking at some of the scripts I have, you get an idea of where my head's at as far as the strategies that I actually use and the indicators that I actually use and why. I didn't build a lot of this stuff for other people. I built it for myself because I needed these things to actually trade. This moving average ribbon will plot many different types of moving averages, exponential, simple, whole, weighted. I just use mostly the exponential, but there's some other goodies in here, and it just plots 2 different moving averages with a fill in between that shows it shows a signal that's actually increasing and some other stuff that you can actually look at. Anyway, this is doing the same thing. A moving average ribbon that's 4 and 8. So right here in this area, this is where Trump started talking tonight with the Oval Office address. Right here at about 8:45 to 9 o'clock, and was immediate short. This is a 100-point short in ES and a 300-point short in NASDAQ futures. It's just nuts what's happening right now. This strategy is extremely effective in this environment, and this is how simple it is. You wait for some kind of cross under with the moving average ribbon, a cross under with the moving average ribbon so it goes to red. You wait for a green candle, or a blue candle in this case that I'm showing, to test this moving average ribbon on the top. The 8 EMA is the top one. The bottom one is the 4 EMA. As soon as that candle tests that candle, you short. You don't even wait. Sell at new lows. That's it. That's how simple it is. So right here, I'm going to show you how incredibly effective this strategy was all day today. Here is the session start, 9:30 in the morning right there. This is the start of the session today. Here's the end of the session. This is the end. As soon as this candle, as soon as the crossover happened, that's when it's a new trend and it's fresh. The trend is fresh, meaning we just had a cross under of the... Let me actually do this so we can actually see these guys a little bit more clear. This is a fresh new session. Moving average crossed over the 4 and the 8. The reason why this works so well is because a 4 and an 8 crossover, and I can get into the actual reasons why I picked those moving averages later, but it's through thousands of tests. You have to trust me on this. 4, 8, or 5, 9 is the ones you want. Sometimes 5, 13. We're sticking with Fibonacci numbers, but very low. To actually make this strategy work, the reason why it works is because to get a green candle that tests this 8 while the 4 stays under the 8, meaning that the moving average ribbon is red, is very difficult to do. We're interested in trades that are difficult to do. To test that level and not make the ribbon go red is hard. So you can do this two ways. You can either wait for a green candle and then short at the close of the green candle and go for a new low. Or some more aggressive strategies would be to short immediately. So you can either short here, on, let's say we did this crossover here. This is the first instance of the crossover. Or the cross under, I'm sorry. Here's the cross under. Right here. That's it. This is the first time that this happened. There's the cross under. Here's the first retest. Sometimes I wait for more than one bar. Maybe this thing needs to be trending for at least 3 bars. So let's just say 3. At least 3. 1, 2, 3. Then the next one is good. We wait for a hit on that 4 and 8 ribbon. And we short at that 4 and 8 ribbon right at the 8 test, which is the upper EMA every time. Your first short would have been 81.13. You could double down on these, but maybe not. And when the EMA ribbon crosses back up above 4 above 8, meaning it goes green, you set your stop 1 tick above the high of the candle that did that. This almost did it, but it did not. Quite. First target, low of the previous low. This is your first target. Oops. So we would sell here. This would be our first sell location. We would take our first profit right there at 80.59. So this was a little less than 60 points. 54 points short. Hold the rest. You can sell half, you can sell 2/3, you can do whatever you want. Hold the rest, it's a greedy short. Do it again as soon as it touches it again. Next short was here. Again, this is an aggressive strategy. If you want the conservative one, you would actually have to wait for a green candle to close green and hit the 8 EMA. But aggressive strategy is here. Here's the next short. 80.58.25. Remember, this is only the NYSE session between these two vertical lines where all the volume is. Short here, 80.58. Next target to sell half of this position. Not the one you already have, just this one. Right about there. So we would sell the next half here. 808. This was another 51 points short. sell 2/3, sell half, hold the rest. Here's the next short, right here. Next short is here at 80.17. Whatever this low is, sell half. Whatever that low is right there. About 79.61. So this is another 56 point short. So already we've got, close to a little over 150 points for a short, and we still have the original short from here. So this original short from this location right here, this guy is now a full 151 points in the money. You can choose to just get rid of this based on some daily ATR rules. Daily ATR would be something that is similar to whatever the width is of the S3 and R3 Camarilla pivots. You can use that as a guide. You could say, no matter what, if I get to the full width of S3 to R3 for my original short, and this is what? I hate it when they do this. This length is 243 points, so not quite there. But we do get to it down here. Almost. Let's see if we get to it. Not quite. So maybe a little bit less than this. Maybe half. Not sure. Maybe the width of... This looks like a better one. The width of R4 down to the... And remember, this isn't going to change throughout the day. Down to the previous close, which is always right in the middle. Or just the width of R3. Maybe this is it. Actually, I'm sorry. I'm not looking at this right. This width from R3 to S3 is the same width from the previous close to S2, R4, S4. Maybe half. So R3 to the previous close is 125 points. So you could, no matter what, say that no matter what, I'm going to take the... And the pivot calculation is really simple. You can just use it's just a fraction of the ATR. I think it's... Or the fraction of the previous day's range. I think it's 55% of the previous day's range. And half that, so 22.5% of the previous day's range is the length from the previous close to R3. I'm pretty sure. You could use that as your target. Whatever you want to do. The point is that you're getting into some of these greedy shorts along the way that are showing you that here was this other greedy short right here. You're still, in this one, you're still also about 147 points in the money on this short on the way down because you're still holding some of it. Here's another one. This one was your third one. This one is being held, and it's 99 points in. So if you held half on each one of these, you are looking pretty good right now. And then here was the capitulation. The way that you determine a capitulation. Here's how I determine a capitulation. I use 200 period Bollinger Bands on either 1 minute or 5 minute. And you can see it. One of the reasons why this was such an effective shorting strategy is if you actually look at what we were doing on higher time frame, on a higher time frame, or a lower time frame, I'm sorry, is that you can see sometimes things that are interesting. So this is another indicator that I have. All the indicators that I have made, they're not just for, shits and giggles. These are all things that I actively use to trade. And this is just simply showing two sets of Bollinger Bands, 200 with 1 standard deviation and 2 standard deviation. The normal Bollinger Band is just 20 with 2 standard deviation. That's it. This is special. A lot of the things that people have shown you on normal videos or something about how to trade, it's really not the most effective way to trade. They're just trying to sell videos. They're just trying to sell subscriptions. The bands are key. For some reason, I have seen stuff just travel inside of the standard deviation 1 and 2 bands on 200 period bands on 1 minute, 5 minute, 15 minute, 1 hour, 1 day for lengths of time. Each time this is a short, it actually came up to this band, this cloud up here is showing the 1 and 2 standard deviation bands for the 200 period moving average, which is what this yellow dotted line is in the center. 200 period moving average is showing that every single time we came to the 1 standard deviation, this bottom band here is this 2 standard deviation. The 1 standard deviation is the inner one. Remember I said that I was using 1 and 2. Every time it came here, for some reason it became a short. This is very similar to using VWAP standard deviation bands, shorting the standard deviation 1, taking profit at the standard deviation 2. Shorting standard deviation 1, we took profit at the new low, but you could have taken standard deviation 2 profit and capitalized on that. So there's a lot of confluence happening, and here's where the capitulation was. The reason why I can say it was a capitulation with confidence, and the reason why I was able to say that out loud in the trading group when it actually happened, was because we were trending in this, this way like this, and then all of a sudden the bottom fell out and we just went straight down. So this kind of move, if you kind of do this, you can see this bottom happen. And that was the same time that VXX made that key structure right here, which is definitely going to be blown up in the morning, and this doesn't mean anything anymore. This is right when we reached this 786 pattern right here. The same moment that happened is when I went long just to do test long on those futures to try to nail this bottom, and I saw this capitulation go down, and then the volume build started to happen right after. So that's what that is. Fast forward to after the Trump speech happened, and let's look at what that is. We're opening up these bands again. 200 period Bollinger Bands are great. 15-minute showing its opening again for yet another sell-off, just like back here for another sell-off. This was that Thursday back on what, the 28th? Yeah. Here is the same idea that we saw on 1 minute chart, how I was able to identify a capitulation, but this is a capitulation on a 15-minute, is we are trending, going somewhat in a tight channel like this, and then the bottom falls out of the channel and you eject out of the bottom of the channel for further selling. Identical move, just on a higher time frame. And then we slowly regained ground at the turning point. So a lot of the times you actually, in these sell-offs, you have to actually wait for these instances, and you know that it's not yet, that there has to be some kind of a capitulation move. So looking at this, if I delete all of these guys, the time to get out of this trade. The time to get out of this trade is when the band flips back to green. As soon as it flips to green, set your stop 1 tick above the high that caused the band to do it. The higher the time frame, the better. Or something, ATR, something that you pick to put up above it. I just use 1 tick above, and that's your stop. It changed to green, and that's my stop. This trade was a loss. The next trade, if you took it, was a loss, unless you identify that this was a falling out. You could also have used the 200 period Bollinger Bands in this case to know that it probably wasn't ready to do a complete sell-off wash sale like this again. So it's probably going to hit this 200 period Bollinger Band, which right now is exhibiting, at this point in time, it was exhibiting a nice straight line, a barrier like this. This is nice and straight. This is a barrier. This is hard to do. This is a squeeze. And usually the first test is going to come right back out again. Obviously, you can't look at everything when you're trading. It's just too much stuff. It's too much information. But if you could have identified that this was a place to probably get out of all the trades and not take the next trade, because you would have taken this next trade right here. If you're doing an aggressive shorting pattern, you would have taken this next trade. And you would never have gotten out of your previous trade. You took profit on this last one. Maybe you have a system set in place where you're taking profit at regular intervals. Even if you're doing a greedy hold, you're saying, okay, for a percentage of the ATR, no matter what, if I'm on a greedy hold, I'm just going to dump that position. And in this case, I use the example of taking the distance between the close and a Camarilla pivot, which is 27.5% of the previous day's range. Camarilla S3 to R3 is 55% of the previous day's range, so half that is 27.5%. Sorry, my alerts for trades. You could have done that, so you would have automatically gotten out of this trade. You would have gotten out of this trade for this short. You would have gotten out of this, maybe. Did you get out of this one? Maybe you got out of this one? Almost. Not quite. Maybe if you use 125, you got pretty close. Who knows? Maybe you just need to set it to maybe 20%. So maybe at 20% it would have been 100 points maybe for your total profit. No matter what, you're going to get out of a trade at that interval just to collect the profit. Trust me, you want to figure that out, whatever that is, that's the most profitable way to get out, because a lot of the times you just want to exit it completely and take the gain. If you did not do that, the last trade that you would have taken would have been right here, and you would have been stuck in this trade, and then you would have been stopped out at this location. This would be your stopping location, and this is where you're stopped out at, right here. This last trade would have suffered a, what? 79.89. Not too bad considering what we've been doing the whole time. A, what? 38-point loss. So, not too bad. Considering all the points that we made on the way down. But it's that simple. Here it is again. Here's the ultimate trade that happened at the Trump speech. Cross under, 1, 2, 3 bars. Okay, check. That's our first check to get into this trade. Make sure you have at least 3 candles. 1, 2, 3. These are those 3 candles. That means that we're live. Wait for the first retest. Here was that first retest. You would have shorted right here. This is where I shorted. Not that. I got 79.80 or something like that. I went a little bit early. And you would have held. You would have sold half here. Here's where you would have sold half or 2/3. At this location. Right there. So this was good for about 70 points short. Held the rest. Still not stopped out. This would be your second entry actually right here. I might actually short this right now. The lower limit for tonight, on the lower limit, if you look at NASDAQ futures, 76.01. So that's where kind of the bottom was. We dipped under it for a second. What does it say? 76.01.50. at the lower limit, no bids and asks can get filled beneath this price. There can be bids and asks underneath the price, and you see it flooring out on this level, 5% down. There can be bids and asks underneath this, but for a moment in this little space right here, the highest bid was beneath this price. So if you are stuck in a long trade, you literally cannot get out of that trade, because there are no bids and the highest ask is right here at this price, and there's no bidders. So you have nobody to sell to because the highest bid is beneath this threshold, and nobody's willing to take your shares away any higher. And CME is locking anybody out from any transactions beneath this price. So you could continue to not gap down, but continue to go lower and lower and lower and lower with the highest bid farther and farther down. There's no limit to how far beneath the limit the bid is until Jasper helped me with this, understanding this a little bit, down to the next threshold in the morning. CME will look at what the highest bid is at 9:23 in the morning, and they will judge whether or not they need to lower this lower limit to the next threshold at 7% down, and see if there's any takers there, if anybody wants to bid. If the bid is still beneath the lower 7% limit, a halt is issued, and then the parameters are readjusted to 13% down to see if any bids are above that 13%, and then trading resumes and then goes to the 20% limit. So you could be stuck in that trade and no way to get out of that trade, and you would wake up with your broker in the morning, and even if you were in a small position, you could wipe out your entire account because you could have gapped down 2, 3, 4, 5% before your broker could do anything about it, and before your balance in your account would actually go negative, and there's nothing that you can do. And then immediately, as soon as the bid opens and the first bid hits, your account would be closed and your account would be a negative balance, and your broker would issue a demand for payment letter to your address telling you to send them a check to cover the negative balance, or to deposit money to make your balance above zero again or equal to zero. That is a place that you do not want to be. So if you bid on this level, you might get some bounces because people are looking at this level, and it's no coincidence that we bounced off of this. Dow Jones futures also bounced off of that level, its respective level. When we hit down here on this second test down here, we actually bounced off that for Dow Jones futures as well. People are looking at those levels. We can get some bounces off those levels, but the other night, on Sunday night, we actually went at least 1% below that level. So you could have been in deep trouble with a long position because you can't get out of it. So I like the Bollinger Bands. I like it because it shows you, it shows you some interesting things. I feel like we need one more test down here somewhere. But that's how simple this strategy is. And you can use it on 5-minute, 15-minute, 1 hour. Works great on CL. It's really simple, but it's just your job to figure out how much you want to risk on the how much you want to risk on each trade, because you're going to have to determine that information on how to actually figure out what you want to risk. So that's just a way to trade. It's effective. It works. It's something where you're buying into a price level that is likely to be something that is going to be a reversal point because you're severely against the grain. The fatter the EMAs are, the better, like in this case. So this multi-time frame candlestick plot, remember, I can show a higher level moving average, and I can also show higher level candles as also. If I just want to show the recent ones, I can just plot the recent 1 hour candles. So in this case, These are 1 hour candles, and I am on a 1 minute chart. And this is showing me the live current candle and where it's going to end in the future. So I'm on a 1 minute chart, but I'm showing the 1 minute candle. So this is effective to find things like tweezer tops, which is what this pattern is right here. This is a reversal pattern. It's a tweezer top reversal pattern. It opens right where it closes right where it opens. The wicks are very small, and then it essentially closes right where the previous open was, and the next candle down is usually a big reversal down. So that's what that pattern is, and it helps to see that kind of stuff. This is an effective strategy. You can use it on 5 minute as well. If I change this to 5 minute for the EMAs, it helps to have. I love these Bollinger Bands. I really like them. It helps because it shows you that you're in the trend. You're in the right direction. It's a further filter. This crossed over. You would have gotten whipsawed out of this position. That's unfortunate. You might have gotten back in here if you were willing to risk it and know that this was just whipsawing you out. It's possible, I've been looking at this, that 8 is actually an interesting time frame to use for this. And in order to do this, you probably want to do like a 1 minute or a 2 minute chart, something that's divisible, like divides directly into 8. Not 5 minute, because 5 minutes is going to be weird because you're trying to get 8 minute candles on a 5 minute chart. It's not going to work out because 5 does not evenly multiply to 8. 2 does. 2 times 4 is 8. So it takes 4 2 minute candles to make 1 8 minute candle, and so on. So this is interesting. These were some buys going into this move. You could have jumped the gun on this. This only lasted one candle. Remember, because we're doing an 8 minute here. So this is only 1 8 minute candle. I can show it if I do something like 8 minute candles here. This was only 1 8 minute candle that actually flipped this thing, but you could have gotten into it if you were dangerous enough and realized that, hey, this is a big move. I want to buy into the next back test. It's forcing you to get into back tests that are good back tests to buy. This is an immediate scalp and an immediate profit-taking situation. You immediately took profit on this level. The recent high of the trend, of the total trend high. You took profit here, right there. This was a 79.77, and I warned at the first, I remember I said, first back test coming, I bought this somewhere around 79.80. This was a 80-point scalp. And it happened in 2 to 4 minutes. And then here's another one. Here's another guy. You would have sold that here. This is where you would have sold. Right there. Still didn't flip. The EMA ribbon is still positive. You could do greedy longs into this. You haven't closed this out yet. You haven't taken any profit. You could get into some more if you want. It's up to the discretion of, you have to figure out what you want to do. Same target. The most recent high. This is always going to be the same target. You want the recent high wherever that occurred at, and that's where you're going to get out. Here's your last long. This was a failure. Never got to the last high. You're going to get stopped out. Other things that you can do to do break-even habits. You could say, if I get a close, if I get an 8 candle close, and I turn these back on, 8 candle close, this was the first candle close that was green. It closed above both EMAs, set my stop to break even. Right there. So now I'm break even. These are all things that you can do to mitigate your loss. As soon as we get a close back up above, and it's a green candle also, it has to be a green candle because you could close back above, but it could be a red candle. set your stop to break even. Now you're safe. And even if, and you could move this up if you wanted to, a little bit higher, but maybe not. And you would have been stopped out somewhere around here. On the way down, similar to the 15, your first short would have been here. 8 EMA. Take your profit here. Here's where you're going to get stopped out on this trade. As soon as this candle went up, this was the high, this high right here. You set your stop to one tick above this high. Somewhere around there. 77.0725. Yep, that's it. So that's your stop. And you were supposed to get out of this trade there, and as soon as that happened, you got out of the trade, and that's when you got stopped out right here. So, and you remember, you could have said, if I took this next trade on the bottom, you could have taken this short. You could have said, the first green candle that closes beneath both EMAs, I'm going to set my stop to break even. In this case, you would have been stopped out right here if you actually did set your stop to break even. Oh, I'm sorry. You need a red candle close beneath both. So the first time that happened was here, actually. So you would have been stopped out somewhere, over here. And that trade just didn't work out, I guess. But you have to use discretion. Maybe you need to see more of a move down towards the lows because your target would have been here somewhere. This would have been your target, down at the bottom. Obviously, you can't sell down there because that's the lower limit, so you couldn't even get out of that trade if you wanted to. So this is an effective strategy to use on 15-minute time frame. You can use small positions to get into these trades, and it works really well. It works best during high volume times like the NYSE session, and that's how you can make a lot of money on the way down. Simple, effective, and you are getting into positions that are likely to be turnarounds. All of these were whipsaws. All of these were sell opportunities. Every single time this EMA was struck while it was red on the top was another sell. And you could have just amassed huge amounts of pips or ticks on the way up and on the way down. Yes, sometimes you're going to get stopped out, but many times you're actually going to do extremely well. I like 15-minute the best. Some others do as well, but there's other time frames that are good too. So we'll see what happens. If this is all I'll say for now on this, but see how it works for you tomorrow, and if it's something that suits your needs. There's many other effective strategies, like using this Larry Connor's RSI, whether it's 95.5 for 2 or 85.15 with the cumulative setting and the 3-period smoothing. It also works pretty well. You can also see that on this, there's just so many ways to, you would short into these overbought conditions, and then there's ways to use the EMA of the RSI on the way down as your stop to get out of the trade. When the EMA crosses back above 0, like for instance here, you would actually use that as your stop, similar to a moving average crossover. You would use that as your stop on the way down. So you would actually get into the trade here. And this takes some thinking. You're going to have to look at this stuff. You would get in here right away as soon as it's overbought. You would not sell any until you made a new low and it's oversold. You would take some profit on the oversold. Then you would wait for this EMA, and I keep coming back to 8 because it works, 8 EMA of the RSI. As soon as it crosses back above 0, which is right there at this line, you would set that as your temporary stop and say 1 tick above this. If it crosses above that, I'm stopped out. That didn't happen till over here somewhere. and then you rinse and repeat the same strategy over and over again, and you just collect the profit. These are really effective ways to trade. You're selling into extremes while a very tight ribbon or EMA ribbon or something that you're using is showing you the trend. So your stops are tight enough, and you're taking extreme positions that are hard to create while the trend exists. That's the point. That's how you trade effectively, and that's how you amass tons of pips and ticks on the way down. Okay, that's about it, and good luck tomorrow.